welcome to The View from the IMF. Financial inclusion is a big topic. Policymakers love it. In theory, everybody love it, including bankers, of course, but it can be quite tough to make sure that you include wider parts of the population and at the same time you keep your credit risk down. But I'm here with Bailey Klinger, who actually is working exactly to help banks to solve this conundrum. So Bailey, how are things going with your business, EFL?
They're going great. And we focus on bringing alternative data to the problem of credit risk analysis. Because if you're thinking about financial inclusion, think about the inclusion impact of a bank, say, in Mexico or India or South Africa that only spoke English, that only offered services in English. Only, in South Africa, about a third of people are fluent in English. In Mexico and India, it's like 10%. Only the elites, the wealthier folks. Now, that would be pretty bad for a bank that wants to work with the mass market. And you have the exact same situation happening right now with data. Banks that only use traditional data, mostly credit bureaus and behavioral data, that has coverage of about a third in Latin America and East Asia and less than 10% in Africa and South Asia. So banks that only speak the language of traditional data are only talking to a very small segment of the population, and that's been their only option until now. But in the past 2 years, 90% of the world's data has been created, and that data can be leveraged as a new language to reach the big pyramid.
How do your systems work? Which kind of data do you go out and collect, and how do you put it together and break it down so the banks can use it to assess their risk?
So we use a few different sources. Psychometrics, which are like those pre-employment screening tests. Think of it as a structured interview on a computer. We also leverage mobile phone data and online social media data. So think of somebody coming into a bank, and instead of just being checked on the bureau and having a loan officer visit their business, think of them answering a few questions on a tablet, authenticating their social media profile, and potentially installing an app on their phone and giving the app access to look at the account details on their phone. All of those data sources can be combined to speak to the exact same things the traditional data speaks to, just in a different language. You can look at the person's stability, the person's level of income, their honesty and character, ability and willingness to repay, just with a different set of data.
And are your bank clients happy with the results?
Yeah, so we work right now across Africa, Asia, and Latin America, and we've screened about 300,000 individuals now, and our client institutions have originated over $500 million, partially based on these types of data sources. And what we've shown is that the combined power of these data sources, although slightly lower than a traditional credit bureau, can get pretty close, and it's available for 100% of the population, 90, 80%, instead of 10, 30%.
And interestingly, you're also based in Lima, aren't you?
Yes, and it gives us a fantastic opportunity to be very close to the front lines of how we're working. And so we can sit in our back office and do some R&D and questions, and then be out in the field and see a client filling out this application now in one of the conos surrounding Lima. And every day around us, within driving distance of our offices, there are people who don't appear in the credit bureau who are getting access to credit, both consumer credit and business credit, thanks to these types of tools.
Fantastic, great business. Best of luck for the future.
Thank you.